All right, hi everybody. Hey, listen, I'm here. I've had a delightful week with a lot of cool people. I'm here, actually, here in my cabin. We're hanging out. We're somewhere. Where are we right now? We're in
Between Mexico and Texas.
Yeah, somewhere between Mexico and Texas. With Rob Walmer. If you've obviously been a member of SMC for any length of time, you know exactly who Rob Walmer is. Aside from being my attorney, Rob is the tax advisor and attorney to so many members and has helped so many people getting their sort of international tax and asset protection structure set up. Rob is obviously a licensed practicing attorney, tax specialist, has just a wealth of experience having lived overseas. Has been in the investment banking world. Was with Big Four for a while. I mean, really just has such a wealth of experience in this, and I think one of the foremost knowledgeable people on the planet. Which is why when these guys asked me to come and speak at their event about international diversification, I said, well, even if I'm not able to make it, I think you should have my attorney Rob come out because this guy, I mean, literally just could write the book on all this stuff. The reason I wanted to sit down with Rob is to, and we are sitting.
You are sitting.
We are sitting. I wanted to have a discussion, just to review. If you're a U.S. citizen, it is mid-March, and so there are some tax reporting, filing requirements that are coming up. So I want to review some of those for people. So let's start with the basic ones. Offshore accounts. All right.
Right.
So people have offshore accounts. The first and most important is the FBAR.
Right. Which has technically now been replaced.
Right.
It's really just sort of a name and process change, not a change in the reporting requirements,
Right.
by the new FinCEN Form 114,
yeah.
which must be filed electronically.
Right.
Just to point on that, though, if for some reason you have not filed the FBARs for prior years or are filing amended returns, now we're in a period where those must also be filed electronically as
Okay.
well. This is the exclusive means for reporting now.
Okay. So we covered that a couple of months ago. Some members may recall. I was actually present I might have been the only human being present on the teleconference with FinCEN when they unveiled the new procedures. I went through it. We took screen captures. We sent that out to everybody. And we'll do that again. I'll resend that alert to everybody so you can see what it is. But that's not due until June 30th.
Correct.
So you have until June 30th to do that. But I wanted to go ahead and bring it up. The idea, and we'll talk about the FBAR more probably at least after the April 15th deadline. But if you have foreign accounts, there are at least two other forms that you need to know about. One is the very simple one, which is 1040 Schedule B.
Yes.
If you have a foreign account, that's a very simple one. So you're already filing your 1040. That's your main individual tax return. Always made me wonder where they get 1040 from. They run through. Do they run through 1,039 other forms before they?
Presumably, I mean, it's been that way forever. One thing about Schedule B, though, because I think I've had endless people who have failed to report foreign accounts in the past. And, one comment from me, I'm not trying to be argumentative, I'm obviously on their side, but, I said, well, you have this statement on Schedule B where they ask you, do you have any foreign accounts? If so, you need to file the FBAR. Do you have a foreign trust? If so, you need to do separate filings for that. And I've seen many, many people who have foreign accounts check no. And again, from the government's point of view, if they want to make your life difficult, remember that you sign your Form 1040 under penalties of perjury.
Right.
If you say no, or if your accountant even inadvertently says no and you don't check it, the government has a big lever in any future negotiations with regard to your status because you have arguably committed a felony by just not answering that truthfully. So please be careful. Please check what your accountant does. If you have foreign accounts, make sure that that part is filled out properly.
Right. Well, and you always talk about this because this kind of segues into the next form. The Schedule B is very easy, by the way. It's there's a little box that you check. It says, do you have foreign accounts, yes or no? You check yes. And then it says, in what countries? And you write the countries. And that's it. It takes...
That's 5 seconds.
Yeah. I mean, I was going to say 60, but literally it's so quick. And you always talk about this. Consistency is key. obviously, if you say on one, if you're filing an FBAR and, the next form, the 8938, and you say you've got foreign accounts, and then on your Schedule B, you say you don't have foreign accounts. The IRS is overworked, they're understaffed, et cetera, but, more than likely, they're going to catch that at some point.
And I think that's an important point. The IRS is, and increasingly so, again, they have lots of people that work there, but they're constantly tasked with more and more missions, including now a lot related to the Obamacare legislation.
Right.
So the odds of being audited, that sort of thing, by a real human being are decreasing. So what do they rely on?
Technology.
Technology to match things, and they match a 1099 with your tax
It's
return.
basic pattern recognition.
Exactly.
If your Schedule B says no and you have an 8938, they know something's wrong. So that's the segue into the other forms. We talked the FBAR, now FinCEN 114, which isn't due till June 30th, filed electronically. Your 1040 Schedule B, which goes with your existing taxes, again, takes 1 minute to fill out. Check the box that you have a foreign account and then list the names of the countries where you have a foreign account. And the other one is the 8938.
Correct, which is the form brought in by the FATCA legislation, which is, and we've talked about this before, duplicative in many ways of the FinCEN 114, although with different filing thresholds, and some things are included on one form, not the other. However, that is, unlike the FBAR, is included with as an attachment to your 1040.
Right.
So is due either on April 15th or with your 1040 if you file on extension.
Right. So if you have foreign accounts, bank accounts, brokerage accounts, etc., you're going to want to file the 8938. I guess you don't necessarily want to file the 8938, but you are. The IRS certainly expects you to file the 8938. How's that? And the 8938 is essentially a reflection of the foreign accounts and foreign assets that you have. There are reporting thresholds. If you have accounts under a certain threshold, it's based on whether or not you're married, whether or not you live in the United States, and essentially the value of those accounts at the end of the year and or the highest point during the year. So, for example, if you're a U.S. taxpayer, single, living in the United States, and you have $60,000 in foreign accounts all year, that's going to trigger the threshold. You need to file the 8938. If you are married, living overseas, and you maintain that same $60,000 in foreign assets, you don't have to file the 8938 because you're far below the threshold, which goes up to $400,000, even $600,000 for married couples living overseas.
And one thing, this applies both to the FinCEN 114 and the 8938, where a lot of people get confused. It is not the size of any individual account. It is your accounts in aggregate. I hear so many times, each of my accounts is under $10,000. I don't need to report. That just is not.
Right. It's irrelevant.
That's just not the rule.
Right. Yeah. So everything gets reported. As Rob mentioned, so with the 8938, this is not just foreign accounts. This is foreign assets, including businesses, stocks, things like this.
Absolutely.
Right. Right. Let's talk about the kinds of assets and accounts that are being reported.
And again, what they were looking to do, what the FATCA legislation was looking to do, was to try to get a better handle on all the foreign, again, financial assets, but things like investments in foreign hedge funds, again, stocks, securities of various sorts. A much wider range of investments than the FBAR, which really was just bank and traditional securities accounts. So the other thing, though, that's just important.
Well, so just to underscore that what you raised there is important. This is a listing of financial assets, and so that's how you have to look at it. As sort of what are the financial assets that you have overseas, and that's what's being reported here. Real estate, for example, you have a home overseas. That's not reportable on the 8938. It's the stock accounts. It's the bonds. It's interest in foreign partnerships and hedge funds and those sorts of things. That's what they're talking about.
And again, the instructions to the 8938 actually do a pretty good job of listing what sort of assets are includable. One thing about the 8938, and this will go to some of the other things we're going to discuss, they have, in an unusual element of sanity, tried to avoid the requirement for duplicative reporting, so that if you're reporting an asset that's within a foreign corporation for which you're filing a Form 5471, or within a foreign trust that you're reporting on Form 3520, you do not have to repeat the reporting on the 8938. There's simply a very short section at the end of the 8938 where you say, and by the way, I'm also filing a Form 5471 or a 3520, and that's it. So again, for most people, filling this form out should not be particularly burdensome in terms of time or effort, although again, you may be bothered by the fact that it's an invasion,
required to begin with,
invasion of your financial privacy, but that's where we are.
So yes, and you're absolutely right. There are essentially exclusions if you are filing other forms that have those accounts. So if you own a foreign corporation, and we'll talk about this form in a minute, but so maybe you're filing already Form 5471 to talk about that foreign corporation. Okay, great. That means that you don't have to re-report the same foreign corporation on the 8938 because you're already filing it on Form 5471. So there are a lot of exemptions and exclusions and exemptions for filing the 8938. Before we move on from the 8938, let's do a quick rundown of reportable versus non-reportable. Right. Okay, so I have a gold money account. Reportable or non-reportable? Okay. Reportable on the 8938. I have physical gold sitting in a safety deposit box. I have the key.
Not reportable. Not
reportable. Okay, so the distinction there is when you have when you open up an account, when you enter into a relationship, and you've got another organization that is maintaining the custody, they have control, they can get into the cage, do whatever.
They're acting as a fiduciary.
Right, they're acting as a fiduciary. That constitutes, in the eyes of the U.S. government, that constitutes a financial asset. I'm not sure, it doesn't matter really what I think. What matters is what they think, and they have 500 pages of regulations on this stuff, and right. I think they made this point very clear.
And there are now, I think, a lot of programs around the world by storage facilities, which I think have now or offer the possibility of a non-reportable storage arrangement. Once again, as you might expect, there's a balance here, a trade-off between convenience, meaning you can just do everything remotely, but it's reportable because somebody else really has control of the gold, versus something which is relatively inconvenient, meaning you may have to move stuff yourself, but is not reportable. And again, for any particular program, you should check with an advisor. Don't make assumptions on this one.
Okay. So we'll keep playing this game, reportable or non-reportable. How about I've set up a self-directed IRA, so my IRA owns an LLC. The LLC has a foreign bank account. Reportable on the 8938?
Not on the 8938, no. And again, for both the 8938 and the FBAR, there's a specific exception for accounts held by IRAs or 401ks or other U.S.-based retirement plans. However, for the FBAR, in very sharp distinction to the 8938, the 8938 is about accounts you own, accounts where the income, if any, from that account would flow directly into your 1040. That's the test of whether you own it.
Which is not the case with an IRA, obviously, because you don't own your IRA. You don't own that account. The IRA owns that account. You just happen to be the beneficiary. It's essentially set up like a trust.
However, the FBAR, again, in contrast to the 8938, has a section for accounts over which you do not have an ownership interest, but over which you have signatory authority.
Right.
Now, as the manager of the LLC, you have signatory authority over the account even though you don't own it. So, reportable on the FBAR, not reportable on the 8938.
Okay, so if you have an IRA that owns an LLC, and the LLC has a foreign account, then that that account is not reportable on the 8938. It will be reportable on the FBAR, but we'll talk about that again probably in another month or two when we go more into FBARs. Okay, so that's the reportable versus non-reportable. Let's then move on. So we've talked about if you have foreign financial accounts, right? So we're talking again Schedule B for bank accounts, the 8938 for these foreign financial accounts, foreign financial assets. So let's move on now. We touched on a few things. Foreign structures, people who might have companies, corporations they've registered in Panama and the Marshall Islands, in Singapore, in Hong Kong. What are we doing with these?
And I think we get a lot of questions about, again, the basic annual form is the 5471, which I think any of the forms we're going to mention here is sort of the longest and potentially asks for the most information, in part because it asks basically for a summary balance sheet, income statement, a statement of retained earnings, and also disclosure of any transactions between the individual owner and the corporation itself. One question that comes up a lot, and sometimes it's not really posed as a question, but rather sort of a demand, is, well, I have this company, but it's not doing anything. It's just sitting empty. I don't need to report it, right?
Right.
And unfortunately, the answer is no, not right. Yeah. People may want that to be true, but it's not the law. However, there is a special provision in the instructions relating, again, and please check because it's detailed as to whether it qualifies for this, for what are called dormant corporations. If it's kind of sitting there and doing nothing, you still are required to follow the 5471, but they allow you not to complete a lot of the schedules and stuff. You can do it sort of in very summary fashion, where basically what you disclose is simply the existence of the corporation and the share ownership.
Okay, so if you had, let's say you established a Panama corporation or a Marshall Islands corporation in 2013, or really any other year, essentially, the 5471 is the form that you file to the IRS that goes with your 1040 on April 15th or whenever you actually file. If you file an extension, then your requirement to file the 5471, the 8938, all that stuff, all that gets extended.
Correct. And let me just talk about that for 1 second. The FBAR, the FinCEN 114, that's totally separate. Again, non-extension.
Right.
And is not even filed actually with the IRS itself.
Right, filed with FinCEN and the Treasury.
In Detroit. And I guess you might want to say, well, you may be annoyed with doing it, but it could be worse. You could be sitting there in Detroit having to look at these forms. All the others we're going to talk about here, the 8938, the 5471, others we'll get to, they are not tax returns. They are information returns which are attached to your personal tax return. If you file for extension, all those forms get extended. And most people end up filing in October. Again, the exception to that is if you have a foreign trust, the Form 3520 and the Form 3520A are not filed with your tax return. Again, we'll get to this in a little later. They are filed separately. And again, the 3520 is extended if you extend your tax return, simply because of a special provision in the law saying it's due when your tax return is due, including extensions. However, the Form 3520A, which is the trustee statement, which is due March 15th, this year March 17th because of the weekend, if you cannot file that on time, that does require a separate independent request for extension. It is granted automatically, but needs to be filed by March 17th.
Okay, so we'll get to that one. So the point is that we're talking about the 5471. So if you have a foreign corporation, the foreign corporation will require that you file this 5471, and that goes with your 1040. So again, you've got a foreign corporation, you've got a foreign bank account, so you're filing the 8938, you're filing the Schedule B, you're filing the 5471 all together.
And if you contributed capital...
We'll get to that. Okay. Yeah. Okay. So the 5471 is the annual form that's required if you have a foreign corporation. So every year you file, so long as you have this foreign corporation, you file Form 5471. And Form 5471 is, as Rob said, it is an information return. So this is essentially how the IRS keeps track. It's not a requirement to pay taxes. It's not a tax bill. You don't necessarily have to send them a check because your foreign corporation made a lot of money. It's just the IRS's way of keeping tabs to make sure, okay, you own this foreign corporation that's in Panama, which is a zero tax place. And so whatever, you made $250,000 with this foreign corporation. So now, we know that there's this $250,000 floating around out there. And at some point, if you pay distribution, pay that to yourself in dividends, and they're going to tax you personally on those dividends. And this is their way of keeping track of that. That's why they call it an information return. So the 5471, as Rob said, this is probably the most bearish, the most difficult, because there are multiple schedules that need to be filed, particularly if it's an operating business. And so in the instructions, it'll say, if you are, if you're a 10% shareholder, if you're a controlling, 50% plus shareholder, if you are a director, files, this schedule, that schedule, this schedule, that schedule. So this is basically if you own a foreign corporation and you own it, you're the director, it's 100% of it, it's an operating business, et cetera. You're going to have to file pretty much every schedule in that 5471 almost, and that's going to be a hefty form.
And the key to making this not particularly painful, however, is simply maintaining good accounting records for your foreign business, which is something you argue on. It can just be on QuickBooks. That's fine.
And something you're probably doing anyways.
Or you should do, right?
Or if you're not, you should be, right?
Yeah, exactly. And so if you're doing good QuickBooks on your foreign company, filling this form out is not particularly difficult.
Right, not particularly difficult. And again, we've recommended folks who can do that for you if it's just not really your cup of tea. And we have those recommendations. I'll highlight those again, probably in the email where I send this. So the 5471 is this is the form that gets filed every year if you have a foreign corporation. So now we're going to talk about a couple of forms with respect to, these foreign corporations, foreign structures that you don't file necessarily every year. You file one time or, at certain key events that get triggered. So the first is, I guess let's talk first about the 8832. The 8832 is the form. This is what's commonly referred to as the check the box form, the entity classification election. Right. So this is where you have a foreign company, and the deal is at some point along the way, the IRS said, okay, I don't care what you've got. If you've got if you've got a C corporation, if you've got a Florida LLC, doesn't matter to us. You can take whatever that entity is and choose to have it treated as, essentially choose how it's treated for U.S. tax purposes. So you can choose that it gets treated as a corporation or a partnership, or if you're the only owner, as a disregarded entity, sort of like a single member LLC where all the profits and losses pass directly to your personal taxes.
Now, obviously, what they needed to do and what they did do was also provide a series of default rules saying if you don't elect, right, here's how we treat it. And here's something where I think there's understandably a lot of confusion. A domestic LLC defaults to partnership status.
Right. So U.S. LLC, so if you register a Delaware LLC, if you don't file this 8832 entity classification form, it's automatically going to be considered a partnership or disregarded entity if it's single member. So what does that mean? It means that if you have this Delaware LLC and it makes $100,000, then that $100,000 shows up directly to your 1040. I guess that would be Schedule E. I always forget if it's Schedule E or Schedule C.
It's again, the partnership itself files the typical partnership tax return, a Form 1065, issues K-1s to the partner, probably something that many of you are familiar with from your own businesses or from investing in domestic real estate or oil and gas partnerships, that kind of thing. Right,
but if you register a Nevada or Wyoming corporation, then the default is that it's treated as a corporation.
Now, for foreign LLCs, however, and again, this is where people understandably get confused. A foreign entity that offers its members limited liability defaults to corporate status. So that if many people here might have like a Nevis LLC, for example, something that we've talked about before, and which can provide some significant benefits for folks. If you do nothing, if you do not file the 8832, it defaults to corporate status.
And okay, so this is an important point, and I'll back up. Just I'm sure everybody knows this, but just so we're on the same page, when we say corporate status, we mean treated as a corporation, i.e., think about Apple, Microsoft, et cetera. Huge companies. They generate income. They pay their expenses. At the end of it, they have profits. Those profits are taxed. And then whatever after-tax profits are left over, those get distributed to shareholders, which then get taxed again. And so that's the key difference. The profit essentially flowing through directly to the shareholders and getting taxed once, or flowing through a level of corporate taxation and getting taxed twice. So what Rob is pointing out, and this is a really good one, is that a lot of people go, and there are LLCs in the United States, again, default to being treated as partnerships, these direct pass-through entities where they're not taxed at the corporate level, and corporations are defaulted to being taxed at the corporate level. Overseas, again, there are places overseas like Nevis where you can get an LLC, and you think, oh, it's an LLC, it's defaulting as an LLC. No, it's not. Its defaulted status, this default status is a corporation. You can choose to have it taxed as an LLC, to have it treated as a partnership or a disregarded entity, so that the income passes through. But you have to file that 8832 with the IRS to say, I have this Nevis LLC. I'm the only owner, so I want this to be a pass-through. I want it to be a disregarded entity.
Now again, to file an 8832, at the risk of making this very boring, but to file an 8832, you must have an employer identification number for that entity. Again, easy to obtain with a phone call to the IRS. But if you are happy with the default status, and you want to file a 5471, there is no requirement that you get an employer identification number. I often find that clients go ahead and do it anyway, not because of the government, but because if this company is really engaged in business, especially with U.S. suppliers,
they need that sort of
thing. Someone's going to ask for it, so you just got to do it for business reasons. Again, but that's something coming out of the private sector, not from the government.
So again, if you're looking at filing that 8832 because you want to, in most corporate structures that are overseas, most legal entities, whether it's a Nevis LLC or a Panamanian corporation or Singapore Private Limited or Marshall Islands Corporation, pretty much any structure that you'd get into is going to be one that offers limited liability to its shareholders. So there's probably very few structures that you would actually get into that don't default to corporate status.
Correct.
So again, this is something you need to talk this over with your tax advisor to say, okay, do I want this foreign entity? Why do I have this foreign entity? Do I have this foreign entity so that I can defer my U.S. tax obligations? Well, in that case, you definitely want to have the corporate status. Is it an operating business where we just want the income, the losses, et cetera, to pass through to my personal taxes? In that case, you would definitely want to have be taxed as a partnership, and so that depends if you want to have that partnership taxation or have it be treated as a disregarded entity, you definitely need to file the 8832. Happens only one time. You don't need to file it every year. And of course, the important thing to mention is that while the IRS does allow you can take a Marshall Islands Corporation, a Singapore Corporation, excuse me, all these different types of corporations, and say, yes, I'd like this to be treated as a partnership. Even though it's a corporation and it's a foreign corporation, yes, you can choose for it to be treated as a partnership. However, for whatever reason, the IRS says, we'll let you choose, to take any of these companies and have them be treated as a partnership, except the following list of these companies.
And it's very easy. There is a list.
Right.
It's right in the regulations. I think this is true that there's no more than one type of entity per country. The idea, and these are referred to as per se corporations, the idea when the regulations were written was there are some entities out there, so like a U.S. public corporation, that those, we think it's too much. So that, for example, if it were, Germany's a great, they've got all kinds of entities in Germany. But an AG in Germany, which is like the BMW group.
Right,
or the
BMW
Audi
is
group,
AG, yeah.
they're an AG. They're so like, obviously one can have their own opinion on the cars, but so like Ford or General Motors that we're going to say, no, that one you can't elect on. That's a corporation.
Right.
One thing you'll see in many Latin American countries, the SA, the Sociedad Anónima, that is generally...
Muy bien, su español.
Sí, yo hablo un poco de español. That is a per se corporation. If you want partnership status in those countries, you're going to use an SRL, which is the Latin equivalent of an LLC.
Oh, an LLC, right. Right. So this is an important one because a lot of people have Panama corporations. If you have a Panama corporation, you can't elect for it to be treated as a partnership. It must be, it always will be a corporation.
And when you are forming the company, obviously, here's, let's just sort of step back. Local advisors, let's say you're buying land in Latin America, often you don't buy the land, you buy a company which owns the land. In some places like Costa Rica, it gets extreme. I actually had one client who had his cell phone in a separate corporation in Costa Rica.
Yeah.
The local attorneys, because it's easier for them and standard practice in their country, will generally make it an SA unless you yell and scream otherwise. Give it some thought. There are some advantages to having the flexibility to elect. And again, just don't go with the flow. That the local attorney may not be aware of the U.S. tax results of doing so.
Right. Okay. I would say probably in most cases, people are doing these, setting up these foreign companies because they want the corporate, essentially the tax deferral that comes with that. So what does that mean? It means that you're generating profits, and all those profits accumulate and accumulate and accumulate over time, and eventually, you're not, if you have, like, let's say, a corporation in a place like Panama where there's no tax, or BVI or something like that, you're accumulating a lot of profits, and then those profits are not taxed locally because there's no tax in those places, and then you can control when you distribute those dividends to yourself. So if we're living in a time where the taxes on dividends is very high, you can control it and say, well, I'm not going to pay that right now. I won't take those distributions. I won't take those profits from dividends right now. I'll wait until maybe they cut the dividend tax rate. Maybe someday they'll cut the dividend tax rate to 5%, and then you can pay all those accumulated profits out at that time. But in the meanwhile, the IRS wants to keep tabs on all this, and that's why they want you to fill out that 5471. So for the most part, I'm going to kind of assume that people are wanting to maintain the corporate status of their foreign entities. So there's another form to be aware of. This is not an annual form. Remember, the 5471 is the annual form. The other one that you mentioned is 926.
Right.
So Form 926 is something that is filed maybe one time or a couple of times. Essentially, this is the what?
It's when you make a capital contribution, which can either be cash or property, to the foreign corporation. You're required to file the Form 926 in any year in which you do that. And again, a really simple form, a one-pager basically, but just remember to do it. As with all these forms, the only thing that's really a problem is the failure to file because of the penalties and the hassle of catching up later, right? If doing it currently, staying up to date, this will not be a big consumption of your time or effort. The only problems arise when you fall behind.
Right. Okay, so 926, again, this is when you, officially they say it's transferring property to a foreign corporation. But
Yes.
What does that really mean, transferring property? What do I mean, property like real estate? Like I'm going to transfer
Sure.
my house? So it also means, though, cash.
Absolutely.
Right. So if you capitalize, let's see, you set up a foreign company in Panama. I just keep using Panama as an example, and then you transfer $100,000 from your personal bank account to the Panamanian bank account for that Panamanian company.
Right.
that Panamanian corporation, that constitutes a transfer of property. In this case, that property equals cash. So transfer of capital from you personally to this foreign corporation. That's a reportable event. And so when you do that, you need to file this Form 926 to say, I have transferred property into this foreign corporation.
And then, of course, you want to be careful. Obviously, that money now should show up in exactly the same amount on the balance sheet that you file in the Form 5471. Once again, the important thing here, to be truthful, of course, but consistency.
Right. All right, consistency. So, okay, so we'll review, again, the foreign corporations. So we have the 5471, which is filed annually. This is essentially looks and feels a lot like a corporate tax return where you're talking about profits and so forth, but it's not an actual tax return, it's an information return.
Now, one thing, again, the form may look overly complicated. There is only one form like this. So when the General Electric Corporation in Connecticut reports the operations of its German jet engine manufacturing subsidiary, they are using the same exact form you are using. Obviously, it is hard to have a single form which covers an individual buying land in Latin America with a major high-tech industrial enterprise. Right. It's why the form may seem a little overly complicated.
Right. But as you mentioned, if you have, let's say you've created a Marshall Islands corporation so that you can have a bank account in Singapore, you have no employees, you have no operations. What you were saying is there's essentially these provisions.
A summary filing.
A summary filing, right? So it's actually can be quite a simple exercise to go through. If you have an operating business, so let's say you have a Hong Kong company that's running an internet-based business, essentially based out of Hong Kong. So now you actually have operations, you have revenues, you've got expenses, et cetera. This is when you start going through all the different schedules of the forms and things like that. But again, it's and there are people that can do this for you. And if you're maintaining appropriate books and records, it's really not that big of a deal. It's just important to make sure that you do file. You don't want to skip it. So the 5471 filed every year. The 8832, it's just filed one time. Maybe if you set up a Panamanian corporation. You don't have to file the 8832 because that's going to be a corporation no matter what. You only have to file that 8832 if you have something like a Nevis LLC and you want it to actually be treated like an LLC for U.S. tax purposes. And then there's the 926, which is filed essentially whenever you transfer, quote, property to a foreign corporation. So that's cash, that's intellectual property, that could be real estate, et cetera. So if you have, some patent or whatever personally, and you move that patent to a Panamanian corporation along with $50,000 in cash, then you would put all of that on the Form 926. Yeah. If you only do that one time when you initially capitalize the company, that's great. That's all you have to do. If you do this multiple times, if this year you do something, next year you put a little bit more money in, the year after that you put a little bit more money in. You do that. You file the 926 every year for every tax year that you transfer property to that company. If you only do it one time, then you only file the 926 one time. Otherwise, you file the 926 every year that you do that. So those are the three major corporate forms. Just as an aside, if you file that 8832 because you have something like, let's say you have a Nevis LLC or even a Singapore company, and you decide that you want it to be treated as a partnership or as a disregarded entity, and you file that 8832, there's two more forms. One is if it's a partnership, it's the 8865. So this is in lieu of the 5471, right? So if you're filing the 8865, it means that you have a partnership, and you don't have to file the 5471, correct. Only the 8865. And that's if it's a partnership. If it's a disregarded entity, i.e. you're the only owner, this is probably the easiest of the three. This is the 8858. This is the disregarded entity form. So again, if you set up a Singapore company, Marshall Islands company, et cetera, and you decide that, or Nevis LLC, you own 100% of it. You don't want it to be treated as a corporation. You want it to be a disregarded entity. Then you file the 8832. to say, yes, I want this to be a disregarded entity, and you file the 8858.
Which, again, is basically a one-pager. It's really simple.
Important point. And then, again, the 926, as we mentioned, if you're transferring property, cash, intellectual property, gold, real estate, whatever, into a foreign corporation, that only applies to corporations.
Correct.
Right. So if you have a disregarded entity, and you transfer $100,000 to that Marshall Islands company, but that company, you filed the 8832 and said, I want this to be a disregarded entity, you don't have to file the Form 926.
There's only the 8858.
Right. So in terms of the reporting burden, the compliance burden, it's obviously much easier if you elect, for things to be treated as a partnership. So let me just ask you this question then, just your view. If all somebody wants to do is hold cash, they want a foreign bank account, and the only way that they can get that done is through a foreign entity, and they're perfectly fine doing that. Do you think people should use a corporate structure if that's all they're going to do, no operations, etc.?
If the primary, to answer it even more broadly, almost every time that the primary purpose of the entity is to hold passive type property, bank accounts, precious metals accounts, securities accounts, land, if the land's just going to sort of be there for capital appreciation, that sort of thing, electing disregarded entity status is almost always the right answer.
Okay, there you go. So if you are running an operating business,
and that operating business is in a low-tax jurisdiction, or a zero-tax jurisdiction, that's when you want to jump to the corporate status. If you're doing an operating business and there's some level of tax, local tax involved, now there's a balancing decision that has to be made, and it might go one way or the other.
Sure. Okay. So again, you got a single structure. You've got this Marshall Islands company. It's either, you elect, it can either be treated as a corporation. Let's say you have an operating business. You're running an internet-based business, and so in that case, Marshall Islands is a zero-tax jurisdiction. So you would probably want it to be a corporation. In which case, you don't need to file an 8832 because it's already, by default, the IRS would look at that as a corporation. So you need to file a 926 if you transfer, money, intellectual property, et cetera, into that company. You need to file the 5471 and do that every year.
And you may have to file the FBAR, again, potentially for two reasons. One, if you own more than 50% of the foreign corporation, for FBAR purposes, you're treated as owning the account yourself.
Right.
Even if you own less than 50, though if you own less than 50% of the corporation and you have signatory authority over the account, you have a filing requirement. That is as broad as, even if you happen, just to be aware of this, it may apply to many people here, if you happen to work for a large company, and that company has bank accounts in other countries, and you as an officer of the company have control over those bank accounts, you are required to report that, even though you work for the Ford Motor Company.
Right, or not even control over the bank accounts. If you're just signatory, right? Even if it takes 5 signatures to move money out of the account, and you're one of those 5,
you're supposed to report.
You're supposed to report
and
that.
And I think a lot of people don't do that, and aren't aware of that, and they can again have some discussions with the IRS about that later. Better to just do that.
Right. Okay. So again, you have a Marshall Islands company. You want it, and you're running a business with that company, so you want it to be treated as a corporation. So what do? You don't file the 8832. You do file the 5471. You do file, you file the 5471 every year. You do file the 926 as necessary, if you transfer property into that. But on the other hand, as Rob said,
again, all simply as attachments to your 1040.
All with your 1040.
All those other schedules you have every year that no one ever can figure out.
And you mentioned the FBAR, but again, that we'll talk about that one, in another month or so. If, on the other hand, you have a Marshall Islands company and you say, all I want to do is hold passive assets. I want to have a bank account. I want to have a gold storage. In that case, obviously every situation is different, but for the most part, you may want to just consider saying, you know what, let's just make that a disregarded entity. So now you do want to file the 8832 and say, please treat this as a partnership. You and your wife own it together, or you own it yourself personally. Please treat this as a disregarded entity. So everything passes through directly to my personal 1040. So you do want to file the 8832. And in that case, then you'll file, instead of the 5471, now you'll file as a single-member disregarded entity. Now you'll file the 8858. Much simpler. You do not file the 926 because 926 is only for transferring property to a corporation. Well, this isn't a corporation now. This is a disregarded entity. So, for U.S. tax purposes, it's as if that Marshall Islands company doesn't even exist. It is as if you have, those assets and so forth.
And just a word of explanation to have this may make some sense, and it's not quite as arbitrary as it might seem. Why is there so much more filing with regard to a foreign corporation than a transparent entity? And the reason really is pretty simple. As we said, because the profits of a foreign corporation may be taxed at many different points in the future, when distributions are made or the company is sold, it's important both for you and for the IRS, as Simon said, to keep a running total every year. What capital has gone in? Of the profits of the company, what portion have been taxed? What portion haven't been taxed? What local taxes has the company been paid? So because of this requirement to maintain from the beginning cumulative totals, there simply is more information that is mathematically required for a corporation than for a transparent entity where we're simply on a very simple annual accounting basis.
Right. Okay. So we've covered now if you have foreign financial assets, if you have foreign corporations, foreign companies, et cetera, and just now that we've talked about 5471, et cetera, we can just briefly go back to the 8938. So if you have that Marshall Islands company and you're filing the 5471, it does not need to be reported on your 8938.
But you must indicate on the 8938 that you are filing a 5471.
Right. But you don't need to re-report all the assets and everything from your basically duplicate the 5471 because you're already filing the 5471. So it's the same thing. If you're filing any of those forms, all that same information doesn't need to be put on the 8938 again and again. You just let them know, hey, I'm filing the 5471, and that's it. So it keeps it fairly simple. Let's move then, I guess, last but not least. Last but definitely not least are the trusts. So if you have, and just for simplistic terms, we'll say started a trust, i.e., you are the grantor, or in some places they call it the settler of the trust. It's the same thing.
It's the guy putting the stuff.
Right, the guy putting the stuff into the trust. Then there are reporting requirements.
Yes.
If you are the beneficiary of a foreign trust, so if somebody, if my mother goes and sets up a Cook Islands trust and names me the beneficiary, do I, as the beneficiary, who am a U.S. citizen, have a reporting requirement?
Only if you get a distribution.
Only if I get a distribution.
Similarly, and a point that gets lost often with people, just to step aside, but only because it's on the same form, if you are a U.S. person and you get a gift or a bequest from your rich Australian aunt who has passed away, unfortunately, that is also reportable on the Form 3520 that we're going to be talking about. That does not mean it is taxable. It probably is not taxable.
But it's reportable.
But it's reportable.
Okay. So you're the person who started the trust. You put the stuff into the trust. So you go down to the Cook Islands or Nevis or one of these places and you form a trust. And so you've got some trustees and you have an arrangement, you have a trust agreement, beneficiary, you put your children, your grandchildren are beneficiaries and so forth. What are my obligations as a trust grantor or settler?
And there are two, one of which technically is not your responsibility, but if you don't do it, nobody else is going to, so right. There are two forms that are, again, highly duplicative. There's the Form 3520A and the Form 3520. The Form 3520A is in theory supposed to be filed by the trustee and talks about the results of the trust. In the past, foreign trustees just wouldn't do it at all. That's actually changed for the better, at least what I've been seeing. So some foreign trustees, like South Pac in the Cook Islands, they won't prepare the form, but they will sign the form. The 3520A basically says, hey, there's this trust and it has these assets, and here is the income that the trust generated. It requires some effort. It's more than, probably not as much as the 5471, but more than the others. Needs to be filed by March 15th, this year March 17th, each year, and is not extended by an extension of your tax return. So if you want, before we get to anything else, if you want to extend that return, there's the standard extension form,
which is coming up on like Monday. Yeah.
Yes, so will tell you one reason why I have not been spending as much time by the pool on the ship having fruity drinks as I otherwise would have liked. There's a form which is the standard extension form for a lot of forms. It's called the Form 7004. Please if you're not going to make the deadline, please have your accountant file that form. Again, it's remarkably simple. The only thing that requires perhaps a day or two of lead time is you do need an employer identification number for the trust, if you don't already have one, to extend that form. One thing that goes along with that form is to make it, otherwise it becomes very difficult to fill out, is what's called an authorization of agent. There's a standard language which all the trustees also know very well. It's basically half a page where the trustee authorizes you as a U.S. individual to be the U.S. agent for the trust. If you get that 1/2 page piece of paper, it means you do not have to file any of the trust documents or any of that with the IRS. It simplifies the process enormously. Again, just be aware in terms of deadlines that obviously the trustees get a lot of requests for these things. Don't wait till the last minute. Just ask them in advance. They will send. You don't have to tell them what to say. They already know. They'll get it to you. You attach it to the 3520A, and it becomes a much simpler process.
Okay, so the 3520A, which is due usually by March 15th, this year March 17th, and then the 3520, which is
the real form.
The real form, right. So this is so the 3520A goes into the IRS early on March 15th separately.
Right. Or again, you can get an automatic 6-month extension to mid-September.
If you file the
7004.
7004. Okay. The 3520, however, gets filed with your. Oh, not with your. Sorry, this is why my attorney's sitting here.
Okay, so the 3520's due date is the due date for your 1040, so that if you extend your 1040, there's no need to do any kind of separate extension, or you can't really. The 3520 is due on the same day that you have decided to file your 1040 or the deadline. So if you extend your 1040, as your accountant likely will do, the 3520 will automatically get extended to October 15th.
Okay. But that goes to a different location.
And that is mailed. It is not, again, unlike the other information returns, although it is basically also an information return, it is mailed to a separate office of the IRS that just looks at foreign trusts and that sort of thing. It is not attached to your 1040.
Okay. So let's review 3520A. If you are the grantor of a trust, even though this is technically supposed to come from your trustee's probably not going to do it. So that puts the onus on you because you're the one who really has the liability if the form doesn't get filed. So 3520A due March 15th, which this year would be March 17th. Given that that's Monday, I guess we better put this out like ASAP. So if that's not going to happen, then you definitely want to file the extension Form 7004. And have that and have that extended. Otherwise, hopefully you've got it ready to go, and you can file Form 3520A, and that's if you are the settlor grantor of a foreign trust, i.e., the guy who puts the stuff in the trust. The other one is the Form 3520, which is going to go on the same day that you file the deadline, same day that you file your other taxes, but that goes to a separate location that's in the instructions. So 2 forms if you have a foreign trust. We talked about the foreign business structures, if you have a corporation, the disregarded entity, et cetera. If you have the corporation, you want to file 54. So I keep saying you want to file.
Well, one thing though about financial account reporting, as we said, if you report an account or it's included in the 3520, you do not have to do duplicative reporting
Right.
on the E938.
Right.
But again, there's a thing at the bottom of the E938. Did you file basically how many 3520s did you file? And you just
Right.
put one,
Right.
and that's it. Again, for FBAR purposes, however, because it's a grant or trust, meaning it's transparent, if it's owned by the trust or a transparent LLC held by the trust, you still can have the FinCEN 114
Right.
filing requirement.
Right, which we'll talk about in another month or two. So foreign business structure, you've got a Marshall Islands corporation that's treated as a corporation. You file a 5471 every year. You file the Form 926 as you transfer property, cash, intellectual property, et cetera, into that. If you have it treated as a disregarded entity, you will have filed the 8832 one time and the 8865 if it's elected as a foreign partnership, i.e. maybe you and your spouse or something like that, or if it's just you as a sole owner, the 8858. And then the last is about foreign financial accounts. The Schedule B, Form 1040, is where you would report essentially, yes, I have foreign bank accounts, and this is the list of countries where I have foreign bank accounts. And the 8938, which is the one that came out of the FATCA legislation, where you list your foreign financial assets, where you would say, I have this bank account here, this brokerage account there, this gold storage account there. We went through the IRA, gold, et cetera, all these things. And again, foreign hedge funds, foreign partnerships, et cetera. But remember, if you're filing already these other forms, the trusts, for the corporations, the disregarded entities, et cetera, you don't have to relist all the same information, but you do tick the little box at the end to say, yes, I've already, I'm filing this 5471, I'm filing this 8858. So that is the grand summary.
That is it. I know that's a lot of information, a lot of numbers and acronyms and all that. Again, I think just the basic message is be aware of this. We understand that this is not a pleasant process and that people object to the invasions of their financial privacy. Nevertheless, there's no answer except to do it,
right.
do it on time, and
do it on time. And when laid out, I think the big picture summary is it's really not horribly complicated. It is what I think you'll find, and you get through it one time. It's not that scary to try and get through this stuff. It's just a question of keep good records and make sure that if you do this stuff yourself, then obviously you want to know how to do it and how to be educated on these. If you have a tax preparer who does these for you, make sure your tax preparer is educated. And I would encourage you to take this audio and give it to your tax preparer, and hopefully this will shed a lot of light for them to be able to do this for you. If you don't have a tax preparer and you need one, we have made recommendations before. We sent out Vincenzo's contact information. I really beat him down pretty hard to provide some really steep discounts for our SMC members. He obliged, very generous in doing that. And of course, a guy like Rob Walmer, I would really recommend that you use somebody like Rob Walmer, not as a please fill out my tax forms for me. That's not really the best and highest use of his time, nor is it probably the best and highest use of your money to pay an attorney to do that for you. Rob's great function and role in life is being able to advise people, which he does extraordinarily well, and Rob's always happy to get on the phone with people. His consultation fee is very reasonable to just sit on the phone for half hour, 40 minutes, and talk through these things and make sure that you're aware. You could have if you have your own tax preparer. You can have your tax preparer, get on the phone with Rob. He's done that certainly a number of times to help educate tax preparers for what they need to do. And again, you have the right help. A lot of resources at SMC. A lot of resources available for you. We've done a lot of reminders for these sorts of things because it's important to make sure that that folks don't get on the wrong side of this. So that's it. Appreciate everybody's time and attention. We'll be hearing a lot more from us soon, and we'll talk to you soon.